Right, first of all, on the monthly, we always got to do the opens and mark swings. So, straight away, we have relatively equal lows down here. We'll mark that as liquidity. And obviously, this high was just taken. Right, so as for the context, right, you have to figure out where are we most likely to go next. So, where are we is the question, right? So, we're not above this high, we're obviously somewhere lower. So, if I go on the weekly, again on the weekly, what do we have, right? What do we have? So, we can see that we've pushed down on the weekly after taking this high. Similarly, on the monthly, you can see that we're making a nice wick rejection lower. Over here, we also do have relatively equal lows down there. Obviously, it's not confirmed, as generally these these stocks do run higher. So if I was looking to be trading the Nasdaq, which is obviously just a group of stocks, I would be looking for it to trade higher naturally, as we've seen it, do with the ebb and flow of time, just generally anyway. So these lows obviously a possibility, but not necessarily something that will be taken. Just in case you're seeing this video and then you're seeing this on the chart as well. Me telling you that a soup over here from one PD array to one discount array, I'm not telling you this will happen, but it's obviously something worth thinking about. So over here as well, we do have a gap. So we'll mark out the end dog. And then we'll also mark the other low over there as liquidity. You can see on the weekly as well, over here you can see this low over here is slightly lower than this one on the right. So that's your swing low, and then this one's also your swing low that taps into this fair value gap. And then you can see on the daily, there's also a gap below this, so this is the last swing low of major importance before reaching this. So we can also see that this is a swing low, and then that's a swing low. So since this candle's lower than this one, I would still predominantly put this one, but I'm also going to mark this one out due to low hanging fruit, because it may decide to take this one but not take this one and then land in the middle of the area. I've seen it happen before, so definitely could happen again. So similarly, like this situation over here, you take this low and then we push down, but we didn't take this one over here, and then again we took this low but we didn't take this one, and then we pushed up. So it could happen. Right, getting into the actual trade, what are we looking at, what are we looking for? So where are we is the next most important thing, what is price doing? So it looks like on the Friday, price finished over here in this inverse fair value gap over here. Another place of importance is going to be this point of control all the way up here. So this can be, thought of as a breaker block of sorts. So we want to mark out the top of that breaker block, because that's where price is most likely to tap and then go off of. So the inverse fair value gap as well, we want to mark the top of that inverse fair value gap, because that's again where price is most likely to tap and then go off of. So as we can see, the poison of choice was the daily inverse fair value gap for NQ. So naturally, off of this, what are we looking for? Naturally, off of any PD array, you would be looking higher, and you would be looking for this to have some sort of support. If we were looking for price to carry on up and then run these highs up here, then we would be looking for this inverse fair value gap over here on the daily to hold, and then deliver a higher price for us. So going on to the lower time frames now, what do we have? So straight away, we can see, fair value gap there, yada yada, what have you. So if you go on the hourly, there's probably something there on there. So we do obviously have this wick here, and then we were to measure this entire thing, we can see that this is the swing low, the first swing low on the 4 hour to tap in and then push higher. It tapped into this fair value gap. We can see prices have been pushed in here. People probably trailed their stops there as well. So price just went straight through it and went down to this fair value gap there. So we have delivered fair value in the market. So what is happening next? Right. So what did the previous day do? We can see that the previous daily candle looks like this. So straight away you would be thinking, right, huge, big wick rejection, probably a bearish candle, right? And that is true. So going into this day, you know, what are we looking for as targets? Just generally, if you were to look at this candle, right, where would you be thinking price is going next? Well, naturally, you would assume that price would go to the low. So naturally, you'd mark out the low, and then you'd look for an opportunity to get involved with price going towards the low. So, as we can see, FVG over here, we would naturally be looking for price to deliver up to here, but we have had that rejection. So, naturally myself, my target for the week has been two things. We are looking for this inverse fair value gap over here, and then if also we mark out, you know, what is the discount range. So this is discount at this 50% here. So that means if anybody wants to be getting in sells, predominantly talking about institutional sells, we want to be seeing these sells get put in at least above the 50%, so we can, you know, well, so they can get a better price when they're so they can get a better price when they're taking a short, to make sure that they, you know, they make money, which is no one wants to buy all the way down here for a short. Similarly, no one wants to long all the way at the top. Therefore, logically, price would want to go higher to then short. Similarly, it would like to go lower if it were to go long. So what is price going to do next? Right. As we have no SMT between these two lows here, and we have no SMT over here, I would be looking at this as weakness in the market. So we'll just play this. So straight away we can see we've come into the day. I won't do too much talking, we'll get down straight to the business. I've already done too much talking as it is. So right here you can see that fair value structurally has been achieved. So if price does want to go up and run this high, that's fine, because structurally we can see that, you know, fair value for shorting has been put in over here. However, there's been no fair value for shorting to this line over here until this move over here. So now fair value has been added into the market. That's some, you know, basic structural fair value. So, you know, we could be looking for this high over here. So let's play. So as we can see, price does gravitate towards it. You can see that we left fair value gaps behind as well over here. So we could also, on ES, we do have SMT right there. So this is a core part of the strategy that we're going to be using today. Unfortunately, actually, it's in a lot of the examples that I would use for SMT, it typically is actually there is SMT. In this case, this is the lack of SMT. So because we've had a lack of SMT between these two lows, and we've had a lack of SMT all the way over here, we would be looking for this high to be ran, but it is possible that these get ran through as well, because we can see that, you know, these don't have the footprints of large institutional moves. So we have price pushing up. At this point over here, you can see we're coming out of the session, and on ES, we actually have managed to run this high. So now we can see that the institutions are getting involved in the market. So because the institutions are getting involved in the market up here, we haven't seen any movement down here. The next thing we're going to be looking for is actually not for price to go up any higher, and since we opened, we delivered higher, we would be looking naturally for sells. So let's see what happens. Whoa, okay, perfect. So we can see that, what has price done? So naturally we've had this SMT, we don't want to see price go above this high. So because London can't go above this high, it has to deviate into something, right? So you can see that we almost ever so slightly tap into this gap right here. And that is fair value. So you can see the price is tapping into fair value, also known as change in state of delivery, right? Which is another core part of this strategy. So typically, let me explain change in state of delivery. Change in state of delivery generally only means literally an order block. So if you wanted to have change in state of delivery, right, it would be you'd have to have longs in the market first before you had a change in state of delivery, right? So you have relatively equal highs over here, you have a PD array above, and then over here you can see we have price pushes up. It's like power of 3. So you have your accumulation, you have your manipulation, and then we distribute lower. The place that the change in state of delivery comes into is an order block. In this scenario would be all of these candles right here. So that is typically what an order block is. An order block is all of the green candles before the down move. So because we have 1, 2, 3 green candles in a row all the way up here, we can see that these are footprints of institutions. And for the change in state of delivery entry, you want to enter at the bottom of that order block. And you can see on the 5 minute, that is that order block right there. So you can see this is the order block. We even had a fair value gap over here. We've tapped into it and we've distributed lower. Now, in this situation, you can see that prices are all the way like this, right? We have huge moves in the market, and if we were to push lower, where are we going to? As I stated before, these are weak lows, right? So all of these are weak lows due to having no SMT. And it's also a Friday previous weekly low. And if we go onto the weekly time frame, where is price more like, which side of the weekly candle is price more likely to take, right? So it's more likely to take the bottom side of the other candle, right? So initially we can see it's distributing down. However, we want to know, where is this going to go to? We have the London kill zone entry. We can have SMT in the previous session. We can see that we have relatively equal highs. We have a PD array higher. Price is tapped into the PD array, so we're distributing lower. So the first place we're going to be looking for an entry is around these lows right here. The next place we're going to look for an entry is these lows over here. So we have 2 PD arrays. We have 2 areas where we're looking to take longs from. Now the reason we're trying to take longs from here is because anybody who bought over here, they would have then, you know, they have their position, etc. And then what they want to do is they want to trail their stop loss, right? So what they'll do is they'll trail their stop loss, you know, up to over here. So the first place the price is obviously going to target is here. However, on the higher time frame as well, people will see this price action and see this bullish day, and then they will also go ahead and trail their stops up here from these moves over here. And I know that for a fact because someone I know who worked in banking told me to trail my stop. So that tells you that the large institutional guys, oh yeah, they trail their stops. They trail their stops. So, where is price going? Bang. And we can see that we've come down. So obviously we're in the first PD array now. However, it's not the right time. It's still 9:40. We're still actually in this London kill zone. So we're going to wait. We're not involved. Time is also important. So we still haven't entered the New York session. We only took this first low over here. We do also have another low. However, on ES, we did take this low. But it's not in our trading plan to be entering straight away. And it's especially not meant to be entering when we already have had, you know, our trade playing out up here, a potential entry playing out up here. You know, showed you 2 entries where you could have got involved, 1 and 2 over there. So this is, you know, model 1, and then this is the model 2 entry. So over here we can see that it's just turned 12 right there. So right here, when it turns 12, we can know that there is an injection of liquidity going to be into the market. So in that 12 to 12:30 range, you know, we want to see something happening. And what can we see? Well, it distributes straight into this PD array right here. So, and what else do we have going on currently, right? So currently, you know, we have also, you know, PD arrays being respected towards the downside. So this still tells me that if I were to take a long off of this, right, and we're not in session, and I try to take a long like off of this here, this fair value gap or this fair value gap, then it's most likely not going to work out because the overall order flow is bearish still at this moment in time. So as you can see, you know, we come over here into 130, we're still pushing down. There we go. So this is the 8:30 open. There is also usually an injection of liquidity over here. It's also the start of the New York AM kill zone. One thing I forgot to mention is one of the most important things in trading is standard deviations. Now, this will tell you exactly, if you can get it correctly, exactly where your trade is going. So initially, the way to use standard deviations is exactly how I was explaining over here. You want to use the change in state of delivery, which is also known as the manipulation leg, right? So on ES, we can see that this over here, since this entire leg, if you go on the 50 minutes better, this entire leg breached this high. Therefore, since there is no swing high within this entire push here, we will use that as our change in state of delivery leg. And because there's SMT, and by what I mean by a swing low, which would be this. So since there is no candle with a wick lower than it on the left throughout this entire leg over here, and even though there's a swing high here, which means there's probably a swing low in here, we still would not use this swing low over here. We want to use the entire thing. So since we have the entire deviation, we can see 2 to 2.5 is right here, and also 1.5 is even lower than this. So we are heavily not interested in that. In fact, this even puts us more interested in previous day low. Similarly, you can see that we have a change in state of delivery here, you know, particularly from this entry over here, you can tell this is change in state of delivery. So you should really be deviating off of that. However, you know, that's going to cut your trade short, right? So You have to be adaptable in the market. We can see over here, right, that this yes is a swing low, and yes, we should use that. However, if you use this, it would not necessarily be wrong. However, you would have been cutting your trade short. So instead, we want to use this low. And the reason for that is it lines up much better with what we're looking for. So initially, we have 2 to 2.5, which is below this and within this PD array over here, which gives price something to work with. So that's number one confidence that this is a better standard deviation to use than this one, right? Because that doesn't even line up. It doesn't like, these don't line up with anything. So yes, you can call it picking and choosing if you'd like. However, it lines up with more things, therefore I'm going to use it. Similarly over here, we can see 6.5 lines up with these, and we can see 4 to 4.5 lines up with these, and we can see it's already been respected right there, right? I will also show you another example quickly of how you can use change in state of delivery to your advantage, right? So if you can see that again, this is the last leg down. There are no other swing highs, you know, on this leg. So since this is the last leg down, this is our manipulation leg, right? So after that, you can deviate 4 to 4.5. You can see that lines up perfectly there. 4 to 4.5, bang. And that's all it is. You don't need to overcomplicate it. You don't need to romanticize it. Just keep it simple, and it works, you know. So you may be like, oh, okay, well, there is also this order block over here, you know, order flow, etc., which lines up perfectly with 4 to 4.5 standard deviations. So you could just be looking simply for that, which lines up with the PD array. And that's the best way you want to use it. You want to use standard deviations and see, do they line up with PD arrays to give you an extra confluence to have better trades. Especially when there's a situation where people like to use liquidity. However, if you use liquidity, you've exited the market up here, right? So now you've left all of this stuff on the table, you know, all of this price on the table, which we obviously don't want to do. So, going back to the trade, we can see that using 2 to 2.5 standard deviations, 6 to 6.5 standard deviations, off of these two standard deviations here from the previous session, which is still encapsulated in this whole move, we can see 2 to 2.5 actually lines up perfectly with 6 to 6.5 over here in this area. So we would be looking for previous day low to get ran, or at least it to come into that area. Maybe we get some SMT, and then we'll be looking for longs. If that area does not decide to hold, then we're basically done for the day, because it's probably going to be a short day, and ideal entries would have been up here and up here at the start of the sessions, right? So we have a trading plan, so we're just going to follow it. So we can see prices push down all the way over to here. So we're going to jump into the 1 minute. You can see we're at previous day low. Actually on the first liquidity point, right there. So I'm just going to play the chart. And then you can see price pushes down again. So right there you can see we have a huge wick rejection as soon as we go below. We also know, as I can see the other chart, ES has gone significantly lower than the other chart. So I would still count that as some form of an SMT, due to the fact that there's a huge deviation of how much they actually went below each other, right? So I would be looking for some form of a long off of here. However, the best time to take a long would be after it breaks this high, because this is a swing high, right? And after it breaks, typically a swing high will gets broken, especially with displacement. we know for a fact that price has just hit a reversal, and the lowest risk entry for a reversal will be after this gets taken, right? So unfortunately, I didn't wait for that due to having balls of steel. What we saw here was we had obviously this inverse fair value gap completely disrespected by this candle. We also have this overlapping with it. So what we did, and we also, since this candle did not tap in to this candle at all, it didn't wick down whatsoever, this is also a rejection block. So now in this case, right, you do have a first PD array, second PD array, and you have your low. So this is your last line of defense. What you do is you put your stop loss over here, you have your first entry here, you have your stop loss all the way down here, right? And if it is the case that it ends up running you, you know, over here on this first entry, then that's it. But initially, we have fair value gap, right? And we have the rejection block. So I wouldn't actually, I would tighten up my stop. I wouldn't want to see more than 50% of the rejection block get touched. So I'm going to have my stop at about, 75-ish. And then obviously, targets will be figured out later on in the day. The main point now is the entry, right? So after that, we'll bring it back and then we'll put it on 1x speed. But obviously after that, we can see right here that what is price doing? Price has just tapped into that fair value gap. Perfect. On the next candle, we can see it pushes down, then swings straight back up. You watch that in real time. You watch price push down, and then you watch price push up, especially when it opened right here in the middle of the fair value gap. Right, we also have this candle close here. If you see something like that where price pushes down, especially touching the rejection block as perfectly as it did like that, we want to be taking longs off this. You already have 1 and 2 since it closed inside and opened inside, right? You have 2 PD array confluences that this is going higher. You also have previous day low that's just been swept, nice rejection, 2 PD arrays created, and we're pushing higher, right? You're also in 2 to 2.5 and 6 to 6.5 standard deviations. So it doesn't get much lower risk of an entry than this, right? But as well, we need to have projections for our targets, right? So we'll put these up here, projections for targets, because this is the last swing before the down move. As you can see, black candle, black candle, black candle, black candle, black candle. This would all be an order block, so this is your change in state of delivery, right? So, what do we have? I'll even draw it again so you can see. But bang, right to that high there. So you can see that we have 1 to 1.5, 2 to 2.5 over here, which lines up with this area over here. So since we had no SMT with these highs, and yes, it doesn't exactly line up, that's fine. Since we basically have had, an accumulation of sorts, and then a manipulation, damn near no retraces, we want to see this, manipulate back up and distribute even higher, right? We want to see it distribute through this. So what do we have? Initially, I would like to see, since the last PD array on the higher time frame, this tapped into for order flow. That's the last high, right? Before this down move. So essentially, since we've had one side of this entire price range leg taken, I would like to see the other side of the price range taken. And you can also see that lines up with 6 to 6.5, which is our standard deviations off of this leg we just created down there, right? So bang, and you can see it runs. So again there, it may not look like much, right? But you can't expect something like price to push all the way down to this gap, right? So typically, again, because this is like going to be a complete rewiring of your brain when it comes to taking a trade, because you're essentially doing the inverse of a market maker model, which is PD array to liquidity, right? In this case, you're essentially doing liquidity to liquidity, essentially, or other PD array. So it's almost like backwards, but you have to understand, right? This is a breakaway gap. Since this candle pushed through and this next candle pushed even higher, and as a big body candle, we don't really want to see price come back all the way to here. So initially, straight away, as soon as this high has been taken, you can go break even. Honestly, you can go break even. Because if the trade does pull back all the way to here and then does end up invalidating, like it does end up stopping you out, you're at break even anyway, and that's all that matters. Because honestly, if it comes back, it's not like it's going for another test of this zone. It will just, you will just be stopped out. So as soon as the break of structure occurs there, and then you have another PD array right here. You can see this PD array. There's a fair value gap there. It taps it, price pushes down, taps it, and then we have pushed away. So as soon as you see something like that, or literally as soon as you see this, and we have candles aggressively pushing above it, you can go break even immediately. Take all that risk off the table so you don't have to lose money, etc. And then just ride the wave. You can see again, we made another PD array higher. Right there. This is also an order block. Right there. Again, another PD array higher. We also have like the tiniest gap in the world in there. And then price is probably going to push higher off of that area. Yep, so again, order block over here. So, but you can see what I was saying, right? So price hasn't pushed all the way back down to this breakaway gap. That's because price has already got down all the way over here. And because we've already had this move all the way down, like I stated over here with the fair value and this leg down, price doesn't feel the need to, put people, say, oh, we need fair value for shorts within this area over here, right? It doesn't need fair value there because, one short down and then one long up. Everybody's had fair value in the game, right? And it's like, maybe you're saying like over here, there's no fair value, right? But you've had, one chance to sell, one chance to sell, one chance to buy, a second chance to sell, and then a second chance to buy, all within like this area of price, right? So fair value has been given there. You don't need price to be coming back again. So again, we can see all the PD arrays are being respected. It's even more confirmation that our trade is going to be going in the right direction. So another PD array. So if you do end up missing the move, as you can see, there's no need to FOMO, right? There are plenty of opportunities in the market for you to be getting involved. So we can see that price is pushed down over here, and then we've rebalanced this entire order block over here that was completely disrespected. So now we'd like to see higher price. So we can also see, right, that I have SMT right here on ES. So at this point right there, so you want to be monitoring for SMT within your trades. This is simply due to the fact that if you do end up getting SMT, this is the footprints of institutional buying. And due to the fact that this is institutional, if you put your stop loss below here, they won't touch it, because they are also putting their stop losses here. They're also trying to buy here. They're also accumulating, which is even more confidence that this trade is going to be going higher. There was no SMT down here, just for clarification, but I encourage you to backtest this, which is also why I didn't put the ES video, the ES chart in. I could have just put it over here, like on the double screen, but I'd rather you guys go back and then you have to verify the things that I'm talking about in this video, so you can learn for yourself, because that's the only way you really learn. You won't learn from, you know, taking somebody's signals. You won't learn from even me giving you my entire strategy on a platter, breaking down every single intricacy of how I'm analyzing the chart, how I'm going in for the day, what I'm thinking about, how I'm structuring myself to take the trade. What am I looking at? What is the price action showing me to give me a reason to take this trade, right? That's what you need to be thinking about. But that won't work if you don't go and do the work yourself. You need to go and get on the chart and look for all of these things, back test it, and then forward test it. That's the name of the game. So, anyway, you get the point. So, price pushes up. As you can see, had a bit of a pullback over here. Not a big deal. Had a minor pullback over there. And now we've pushed higher. So, why did we have that pullback, you're probably thinking, right? I'll explain. So, as you can see, since we pushed all the way through here, right, all of these candles, it kept pushing above. Price never felt the need to come, you know, come back to this area, right? And then, you know, why did it not feel the need to come back into that? Well, we can have a look. But as you can see, there's no lower time frame fair value gap for price to fill, so there's no reason for price to be going that low anyway, right? Over here, you can class this one as an inducement of this low, right? And then a tap into this order block over here. And then we're looking for longs off of that, right? But we can also see on the higher time frame that we have this candle over here, which is creating that fair value gap, right? And then we can also see that in 1, 2, 3 50-minute candles, not once did we close outside or below, not once did we close below this fair value gap, right? So, we want to see price pushing up. We can also see that we're in that 4 to 5 standard deviations range, right? So, and that would be TP. Initially, if you were to hold this higher, as I was, thinking about holding it higher, I would have been holding possibly until this high. But as I explained, with the point of control, we can see we have a point of control up here, and similarly, we have a point of control down here, right? And then that's 2 point of controls in one area. So you could use this 6 to 6.5 standard deviation from over here, as we know it's valid, as a target. However, I think that previous day high of 4 to 4.5 standard deviations definitely would have sufficed. So this is the new strategy. I've been fine-tuning as far as rewiring my brain, entries and mostly a lot of patience as well. You really have to be patient with this, because you know it can really turn into revenge trading really fast. Like, I don't want you guys to be coming into the market and thinking that you're going to be bottom ticking the daily candle, you know, and running and getting the entire of the daily move every single day, because it's not realistic, right? You people can, people do, but you know, with minimal knowledge, is really possible to be coming into the market and then, you know, doing this easily just after watching like my video. No, I want you to go back. I want you to back test this trade, and then I want you to see similar trades that maybe I would have taken, you know, using this strategy. Like, for example, there's a trade in here. So if you want to find the trade, there is a long that is in here to this 4 to 4.5 standard deviation range, right? So there's also an entry in here. It uses the same rules as this one over here, right? You can see that we have SMT over here of the daily open, right? Because this is the start of the daily candle. So we have SMT over there, right? So you can see this is Friday. Yeah, so we have SMT. And then there's also minor SMT over here. And then I already explained the standard deviations within here. But this one's really easy. You can see clear power of 3, accumulation, manipulation, distribution. You don't even have to be a genius to figure that one out. So, thank you guys for watching. I hope you learned something. Please backtest this. Please use the concepts that I have shown you in this video, because they are outrageous, absolutely crazy. This will add so much precision to your trading, so much precision. Good luck and happy hunting.